this is the 2022 company final account, Nolan Ltd, and this was from the Deferred paper, which was on after the June exam. So it was sat in the summer by any students who could not sit it in the June exam. So it was a company final account, and we're going to take it and do it in every step that we usually do. Step 1, lay out your accounts, 5 or 6 minutes. Step 2, transfer your figures into the accounts from the trial balance, 6 or 7 minutes. Step 3, calculate the investment income and debenture interest for the year, which will take 3 or 4 minutes. Step 4, complete the adjustments, which will take approximately 32 minutes. And step 5, tot up your totals for another 5 minutes. So this is how your question might look. So this is just from the 2015 paper. So you can see I have all the workings done on the face of the accounts, and you know, everything is there that we need. So reducing the amount of workings pages is going to help us because we are not going to be making any mistakes, and also we're not going to forget to transfer over some of the workings that we've done, which happens quite a lot. So that is going to reduce a lot of the errors that you might make. So step 1, lay out your accounts. So as always, it is very, very, very important that you lay out the accounts correctly, and it's very important that you have the layout done correctly as well. So say for example, in the company accounts, a lot of students might make mistakes from the operating profit down, and they might make mistakes from the finance by down also. So just make sure that everything that you see here, you do it in that order. So 5 or 6 minutes to lay that out. So you can pause the video and do it if you wish. Step 2 then, we transfer the figures into the accounts from the trial balance. So that'll take 6 or 7 minutes. So here is our trial balance and then all of our adjustments. So for this step, we are literally just looking at the trial balance. Okay, so as you know, we're going to use the alert diagram. Okay, so we've got A, L, E, R, and then the T. So A, L, E, R, T, all right, the alert diagram. So assets and expenses are on the debit side, liabilities and revenues are on the credit side. Now there are a couple of examples or a couple of exceptions to the rule. For example, debtors and bad debts provision. So bad debts provision is just a contra asset. It is the asset debtors being reduced. It is not a liability or a revenue. Okay. Likewise, the same depreciation here is a contra asset. It is the asset premises being reduced by 41,000. So a couple of exceptions to the rule, but the majority of the time your assets and expenses are on the debit side, your liabilities and revenues are on the credit side. So just going down through these then, we're going to see where everything is going to go. So premises and accumulated depreciation, delivery vans and the accumulated depreciation, that they are all balance sheet TFA. The patents are intangible fixed assets. Okay, 6% investments, that is financial fixed assets. Opening stock in the first, 48,000, that's the TPL trading account. Likewise with the purchases and sales, TPL trading account. Then you've got directors' fees, okay, that is an admin expense. Salaries and general expenses, another admin expense. Debtors and creditors, well the debtors is going to go into the current assets and the creditors is going to go into creditors minus 1 year. Advertising is a selling and distribution expense. So selling and distribution expense, because advertising is promoting your sales. Your provision for bad debts is going to be taken away from the debtors figure. Dividends paid is going to be down at the bottom of the trading profit and loss. So we're going to be paying the dividends to our shareholders, and we'll do that after we've paid our corporation tax. So it'll be situated below the corporation tax. Profit and loss balance. Now, this is a 52,000 loss. How do I know? Well, profit is a liability to the owner. Okay, so if I made a profit, the profit would be recorded on the liability side because profit is a liability to the owner. Okay, so profit's a liability to the owner, All right. So we have to ensure that we know profit's a liability. So when the profit's on the right hand side, the credit side, that means a profit. When it's on the debit side, the left hand side, that is a loss. Okay, 8% debentures then, 400,000, and that is going to go into finance by creditors plus 1 year. The bank is on the asset side, so that is balance sheet, current assets. And then the issued share capital, they are both liabilities, balance sheet, finance by capital and reserves. So that is the trial balance. We just now have to enter all of these figures in. Now you'll see that at the start I had authorised capital in here. So that authorised capital came from the top of the question. Then I'm taking everything along, right? So 850 in the cost of land and buildings, that's the first bracket, and the second bracket is accumulated depreciation. So we want to make sure that when we are putting in all of the figures, okay, go back and look at the steps 1, 2 and 3 video if you need to for this, but it's very important that we put all the figures in the correct place. So very important then that we also tot up the issued and authorised share capital. Very important that you put advertising in selling and distribution, okay? And you know, it's just very important that you make sure you've got the correct amount of zeros, you've written the figure in correct and everything else. So whatever you have to do, just make sure you've got that all locked in and you've got it all correct. So after you double check that, you move on to your step 3, which is calculate investment income and debenture interest for the year, which should take you 3 or 4 minutes. So just a recap here, the investments, the financial assets themselves will go up into financial assets in the balance sheet. The investment income for the year would go into the trading profit and loss. And this is regardless of, it doesn't matter if you have received it all. If it relates to the current year, you enter it into the trading profit and loss. If there is any investment income due that you are yet to receive at the end of the year, it's going to go into the current assets. And every single question 1 final account has this. So just know that, you know, be ready for that. You are going to see that there. Then debentures. So debentures are our long-term loan, okay? There's a fixed rate of interest on them. They are going to be found in the finance by creditors plus 1 year. So the 400,000 debentures will go there. The debenture interest for the whole year, right, needs to go into the trading profit and loss. So it doesn't matter if we have paid it all or not. If it relates to the current year, we put it into the TPL for the current year. And that's very important that we do that. Then we've got debenture interest due then is going to go into creditors plus 1 year. Okay, so any mortgage interest or any debenture interest that we have yet to pay is going to go into creditors plus 1 year. Okay, so it's very important that we know that every single Leaving Cert question 1 has investment income due and debenture interest due. Okay, so that is it. Right, so here we are. Here's the trial balance, and we can find the information about our investments and our debentures here. So we had 6% investments, 200,000, and they were acquired on the 1st of the 4th. So we had them for 9 months of the year. So we had them for the 4th, 5th, 6th, 7th, 8th, 9th, 10th, 11th, 12th, which is 9 months. So 200,000 multiplied by the 6% rate, multiplied by 9 over 12, that is €9,000. And then the debentures, so we go 8% debentures, including 100,000 issued on the 30th of the 6th, 2021. So we got a top up on our mortgage. So our mortgage before the 30th of the 6th would have been 400 minus 100. So our mortgage would have been 300,000 for the first 6 months of the year. So 300,000 multiplied by 8%, multiplied by 6 over 12, that is €12,000. And then 400,000 by 8% multiplied by 6 over 12 is €16,000. 12,000 plus 16,000 is 28,000 euro altogether for the year. So investment income 9,000, debenture interest 28,000. So we're putting our investment income 9,000 into the TPL, and we're putting our 28,000 debenture interest into the TPL, because that is the investment income and the debenture interest that relates to the current year. And it's very easy for us to just throw our workings in here beside that. Now, we know for sure that this happens in every question one. We will have some investment income due and we will have some debenture interest due. So we've got 9,000 investment income due and we've got 28,000 debenture interest due at the end of the year. And so then we'll figure out what we owe or what we are owed at the end of the year then from that. So that is step 3 done. And at this point in time, you're probably up somewhere between 40 and 50 marks out of the 120 marks for the question. And the only calculations you've done is your investment income and your debenture interest so far. So that's good news. So that's steps 1, 2 and 3 done. And you can check after each step that you have done it correctly. Once you've done your checks for steps 1, 2 and 3, you can forget about that then and you move on to your adjustments. So step 4, start the adjustments, and that will take you approximately 32 minutes. So this year the adjustment looked all right. There was 8 adjustments. Adjustment number 1, stock at cost on 31st the 12th 2021 was 75,000 euro. This includes stock that cost 7,000 but which now has a net realisable value of 60% of its original cost. Okay, so nice and easy one to get us started here. 75,000 minus 7,000 and plus 4,200, and 4,200 is 60% of 7,000. Okay, so if you multiply 7,000 by 60%, you get the 4,200. So minus 7,000 plus 4,200. And we have to remember then to put our closing stock also over in our current assets in the balance sheet, right? And we just write in brackets as per TPL, because whatever figure we have here at the end of the year is going to be what we bring over here. And if we have the wrong closing stock figure, we'll still get our marks here, because they always give marks for students' own figures here. So that would be good. Okay, next question. Goods were sent to a customer on a sale or return basis on the 31st of the 12th, 2021. These goods were recorded in the books as a credit sale. The recommended retail selling price of these goods was 4,800, which is cost plus 20%. Okay, goods sent to a customer on a sale or return basis. What this means is, we are giving them to a customer and we are saying, if you sell them, happy days, we'll invoice you, we'll charge you. But if you don't sell them, we won't charge you. Okay, so that's what a sale or return agreement is. Now it's saying that the goods were recorded in the books as a credit sale. So our bookkeeper recorded them as a credit sale in error. That was completely wrong for our bookkeeper to do that. Okay, so that should not have happened. So we need to rewind the credit sale. So rewind the credit sale. Now this is important information here. The recommended retail selling price of these goods was 4,800, which is cost plus 20%. Okay, so that's the only information we have. It's phrased a little bit differently than we'd usually see it, but what we're going to have to do is minus the selling price from sales, right, minus the selling price from debtors, and then we're going to have to add the cost price back to closing stock, right? So add the cost price back to closing stock. So that information is important here. 4,800 is the recommended retail selling price. So that's the sales and that's the debtors. Okay. But then we need to find, right, well, what was the cost price to us then? Okay. So we would divide the 4,800 by 120, multiply it by 100, and then we'll see what we're going to get here. So sales minus 4,800, debtors minus 4,800, and we'll add 4,000 back to the closing stock. So how do we get the 4,000? 4,800 is equal to 120%. So if you put 4,800 into your calculator divide it by 120 and multiply it by 100, you get €4,000. So look, that question's phrased a little bit. They usually phrase it differently, but you need to know that the closing stock is different from the sales price. So yeah, that is question 2 done. Now, adjustment number 3 then. Patents are to be written off over 8 years commencing in 2021. So patents are to be written off over 8 years commencing in 2021. Okay, so patents are our intangible fixed asset. Okay, so our intangible fixed asset, we have them for a specific amount of time. All right, and what that entitles us to is the fact that we have these patents, we have this legal bits of paper that says that nobody can copy us, okay, for 8 years. Nobody can imitate our product. If they do try, we can take them up in court. You know, we could sue them for damages, okay? So they're to be written off over an 8-year period commencing in 2021. So looking at our trial balance here, you can see that the patents incorporated 3 months investment income, which is completely silly because a patent is an asset account, whereas the investment income is a revenue account, right? So patents are an asset account, investment income is a revenue account. Why did the bookkeeper put a revenue into an asset account instead of putting it into its revenue account? It should have put it in to investment income account. So that was really, really, really silly on behalf of the bookkeeper. So if we were just to calculate how much 3 months investment income is, we would look at the 200,000 investments, multiply them by 6%, and then multiply it by 3 over 12. And that gives us €3,000, okay, is the investment income. Now, investment income, if the bookkeeper was half with it at all, they would know to put investment income into the investment income account. And just to show you here, if we were to put it in correctly, it would go on the credit side, okay, because it is a revenue account, right? But the silly bookkeeper put it into the patents. So if we wanted to take it out of the patents then, if we wanted to put it into the investment income, we'd credit it. Then to take it out of the patents, we would actually have to add 3,000 because they put investment income into the credit side of the patent account. That would have reduced the patent. So the patent actually would have been 63,000 and not 60,000. If you're confused about that, please do go back and have a look at the patents adjustments video. So the patent actually was 63,000, right? This commenced in 2021. Commencing in 2021, we're doing the accounts for 2021. So all we have to do then is 60,000 plus 3,000 divided by the 8 years, 7,875 is the patent written off. Up in the balance sheet then, we're going to have our patents, what are they worth at the end of the year? So we're going to have 60,000 plus 3,000 minus the amount that was written off, which is 7,875. So the patents at the end of the year, we have 55,125. Then we cannot forget that we actually received this 3,000 investment income. So what we would do is, in our investment income due, we would take away 3,000 from the 9,000 investment income for the year. So that is adjustment number 3 done. Okay, adjustment number 4 then. So it says during the year, €12,000 in stock and 28,000 of buildings were destroyed by fire. The insurers agreed to pay compensation of €38,000. A new storeroom was built by the company's own employees. The cost of their labour was €30,000, which was included in the salaries and general expenses figure. The materials costing €35,000 were taken from existing stock. No record had yet been made in the books for the fire or new storeroom, and no compensation has yet been received. Okay, so look, this is about a couple of different things. Okay, so the first thing here would be that, you know, we need to record the fire and the insurance in relation to the fire. So we'll take a look at that first. So during the year, 12,000 in stock. Now, it's very important for you to know that we see the word stock. We do not automatically go, oh, closing stock. That's what a lot of students do. But if you see stock and our goods and during the year, that is purchases figure, not closing stock figure. Okay, nowhere in this does it say 31st of the 12th, so therefore you leave closing stock out of this. Okay, so during the year, 12,000 in stock and 28,000 of buildings were destroyed by fire. So from the purchases figure we take 12,000, and from the buildings figure we take 28,000. So because they were destroyed. Now if we add up all of the loss there, that is 40,000 euro. 12,000 plus 28,000 is 40,000 loss. Now the insurance company has promised to pay us 38,000. So they have not paid us this yet, right? So we are going to put that into current assets. So that is insurance claim due, 38,000. Then, right, we have to say, okay, well this isn't good, right? Because we're 2,000 short. We've lost 40,000 and we're only getting 38,000 covered, right? So that's a loss of 2,000 euro here. So we're going to have admin expenses, loss and insurance claim, 2,000 euro. Okay, so that's the first couple of sentences dealt with there. Okay, so we need to break down a big long paragraph into chunks and just deal with it bit by bit. The next part here says a new storeroom was built by the company's own employees. The cost of their labour was 30,000 euro, which was included in the salaries and general expenses figure. The materials costing 35,000 were taken from existing stock. No record has yet been made in the books for the fire or new storeroom, and no compensation has yet been received. Okay, so there is a hell of a lot going on here, and all we can do is bit by bit by bit break it all down. Okay, so new storeroom was built by the company's employees. Okay, cost of everything is in the TPL because it's in the salaries and general expenses. Materials costing 35 were in the stock. Okay, we're in the existing stock. So remember, this is during the year, so this is purchases. So as yet, all of the costs for the building, right? So the building here is an asset, right? But where all of the costs are currently, the costs are currently in the TPL, right? And the cost should not be in the TPL because the TPL is the place where we record expenses and revenues. It is not where we record assets. So we need to take the cost of that building out of the TPL and put it over into the assets, right? So new storeroom was built by the company's employees. Cost of their labour, 30, was included in salaries and general expenses. So we're going to take 30,000 out of the salaries and general expenses. We're going to take the 35,000 out of the stock. So they took stock worth 35,000 out of the firm's stock, right? So we have to take that 65 out of the TPL because the TPL is for the business's expenses and revenues, not the assets. So what we're going to do is we're going to put that where it actually rightfully belongs, which is over in the asset buildings. Okay, so we're going to add the 30,000 and we're going to add the 35, and that is that adjustment completely done then. That's it. Okay, so you've done the fire damage and you've done the redevelopment of the storeroom. Okay, so it looks a lot more complex than it actually is. Take it sentence by sentence. Realize that if you're building an asset, okay, the amount that it costs needs to go into the asset, not into the TPL. So we'll take it out of the TPL and put it into the asset. Okay, right, the next adjustment number 5, says the suspense figure arises as a result of the incorrect treatment of discount received 800 entered only in the creditor's account and sales returns of 300 entered only in the debtor's account. Okay, so again, we're going to use our trial balance to help us do the suspense adjustment, right? So discount received entered only in the creditor's account. So what other account would discount received need to go into? Discount received would also need to go into a discount account. Now, if we're looking down through this trial balance, we're not seeing discount account, right? We're not seeing discount account. So like, we're going to have to make one. And so if we were making a discount received account, hopefully you would know that you would record discount received on the credit side. So discount received plus 800 here. So our suspense figure was entered in here because at one point the trial balance didn't balance. So the bookkeeper shoved whatever the difference was in with director's fees. Now, for us to get these two sides to equal again, so when we add 800 to the credit side there, that's going to mess up our balancing of our accounts, our debit and credit. So what we need to do is say to ourselves, right, what would we do with 800 on the debit side? So we put 800 on the credit side. What we need to do to get the trial balance to equal again is add 800 to the debit side. So 65,000 plus 800 here, and the two sides will now equal. And that is that first part done. The second part then says sales returns of 300 entered only in the debtor's account. Okay, so sales returns of 300 entered only in the debtor's account. So sales returns from a debtor would affect my debtor's account, and it would also affect my sales account. So my sales account, when we look for it, where is my sales? My sales is here. Okay, so 9898, right? If my sales reduced because I had sales returns of 300, that's going to minus the 300 here from the sales. Okay, now my two sides do not equal again, right? I take 300 from the credit side. What will I have to do to the item on the debit side? I'll also have to take away 300 there as well. Okay, so that would be your suspense adjustment, completely fixed, and then the bookkeeper would no longer need a suspense account because they're after fixing the director's fees to get it to be what it actually meant to be, and they're after fixing the 2 hours that they made along the way as well. So we take what we've just done in the trial balance here. So in our sales, we minus 300. In our director's fees, we plus 800 and we minus 300. And in our discount received, we just enter in our 800 discount received. So we're just ticking along that we have now entered all of them. And that is that adjustment 5 completely done. Now, moving on to adjustment number 6. So it says the advertising payment is for an 18-month campaign, which began on the 1st of the 10th, 2021. Okay, so the advertising payment is for an 18-month campaign, which began on the 1st of the 10th, 2021. Okay, so we look at our trial balance here. Okay, we have 30,000 advertising, right? That's for an 18-month campaign, right? 18-month campaign, 30,000. What that would be then per month, you know, we need to work that out, but let's just recap what are our accounts here for. Our TPL records, so our trading profit and loss records the advertising for this current year. We're doing this for the year 2021, and this is the 1st of the 10th, 2021. So that's the 10th, the 11th, and the 12th. So we've got 3 months then for this year. Okay, so 3 months for this year, and then we will have 15 months prepaid at the end of the year. Okay, so already obviously done that there. So 3 months for this year, 30,000 divided by 18 multiplied by 3 is 5,000 advertising for the current year, which we'll put in selling and distribution. And then the 15 months prepaid at the end of the year, 30,000 divided by 18 multiplied by 15, 25,000 euro in the current assets. So selling, distribution, advertising, 5,000 for the current year. Advertising prepaid, 30,000 minus 18 or divided by 18 multiplied by 15, 25 grand. Okay, so that is adjustment number 6 done, and you'll see more and more of these, I'd say, creeping up in exams. They're not that common, but the last few exams we have definitely seen them. Okay, so adjustment number 7, the figure for bank in the trial balance has been taken from the company's own records. However, the bank statement dated 31st the 12th, 2021 has arrived showing a balance of €24,880. A comparison of the bank account and the bank statement revealed the following discrepancies. Number 1, investment income of €3,000 had been paid directly into the bank. Number 2, a credit transfer for €2,000 had been received on the 31st the 12th, 2021 in respect of a debtor who has recently been declared bankrupt. This represents a first and final payment of 40 cents in the €1 owed. Number 3, a cheque issued to a creditor for €740 had been entered in the books, cash book and ledger as €470. And 4, a cheque of €3,150 issued to a creditor had not been presented for payment by the 31st of the 12th, 2021. Okay, right, so as always, the bank adjustments look very intense. They look like a lot, but when we break them down, they're absolutely fine. So the way I would suggest that you lay out the working on this would be just have one column with what other accounts are affected. Column number 2, we'll have the bookkeeper's bank figure. Column number 3, just what's AIB's bank statement figure, right? And then there was 4 discrepancies in this, so I've just got numbered 1, 2, 3, 4. Now, the bank figure is taken from, the bookkeeper's bank figure is taken from the trial balance, €17,000. That is a positive €17,000 because it is over on the asset side. If it was on the credit side, that would be a liability. The bank statement figure then is a balance of 24,880. So that is a positive bank figure as well. Now, the comparison of the bank account and the bank statement revealed the following discrepancies. So number 1, investment income of 3,000 had been paid directly into the bank. Okay, so hopefully you would know that AIB would know about that then if it was paid directly into the bank. So paid directly into the bank, right? The bank would know about that. Maybe the bookkeeper just has to adjust her accounts. So this is money coming into the bank. This is already a positive figure, so we just add €3,000 there. Now, what other accounts are affected? Well, we need to record that investment income has been received, okay? So we will say, all right, investment income due, we're going to reduce that by 3,000. So in the balance sheet, current assets, investment income due minus 3,000. Number 2 then, a credit transfer for €2,000 had been received on the 31st of 12th, 2021 in respect of a debtor who has recently been declared bankrupt. This represents a first and final payment of 40 cents in the €1 owed. So a credit transfer of 2,000 had been received in respect of a debtor. So credit transfer is just like somebody pinging money to somebody else, like online, electronically, right? So it has been moved from somebody's account into the business's bank account, right? And hopefully, again, you'd know that the bank would be the first to know. So AIB would be the first to know about that. Maybe the bookkeeper just hasn't checked the banking online or whatever to see that that has actually been received. 2,000 have been received, so we're adding it to the positive 17,000 figure. Now, 2,000 had been received in respect of a debtor who has recently been declared bankrupt. This represents a first and final payment of 40 cents in the €1 owed. This is not good news. This is sad, right? Because they're saying now we will not receive the other 60%. Okay, the debtor's gone bankrupt. We will not receive the other 60%. So that is bad news. So just remember, in every single final account question, they always have a bad debts written off or bad debts recovered question, right? So here we've got 2,000 into the bank and we're going to have 3,000 that we're never going to receive from this debtor. How do we work out the 3,000? Well, if 2,000 is equal to 40%, then bad debts written off, that is 60%. So the 40% is 2,000. So 2,000 divided by 40 multiplied by 60 is 3,000. And so the debtor is going to be reduced by 5,000 in total, which is the 2,000 that they have paid us and then the 3,000 that they will never pay us. Okay, so that is number 2. Number 3 then says a cheque issued to a creditor for 740 had been entered in the books, cash book and ledger as 470. Okay, so this is an error that the bookkeeper has made, right? AIB doesn't give a damn about that. They won't ever hear about the fact that the bookkeeper made a mistake. It's got nothing to do with them, does not concern them. So it is about, we need to now fix the bookkeeper's bank figure. So look, a cheque issued to a creditor, right, have been entered into the books. So that'd be the bank and the creditor account, right? How should it have looked? It should have reduced the bank account by 740 and it should have reduced the creditor by 740. Okay, so that's what should have happened. Did that happen? No, it didn't happen. It was entered into the books as 470. So we put the mistake 470 into the bank and the creditor. That was the mistake. So look, this is what we have right now, but this is what we want. So how do we get from where we are currently to where we want to be, which is the green, okay? How do we get from red to green? Well, we need to add more on the same side. So if we figure out what's the difference is 270. We need to add 270 to the 580 and then that does equal 740. So in the bank, we're going to minus 270 and the creditor, we're going to minus 270 as well. And that is number 3 corrected. Okay, and then number 4, a cheque of 3150 issued to a creditor had not been presented for payment by the 31st of 12th, 2021. Okay, so cheque issued to a creditor, not presented for payment. So the bookkeeper here gave a cheque to a creditor. They went away off, they put it in their back pocket or put it in a drawer and they haven't gone into the bank to cash it yet. So the bookkeeper has issued the cheque. It doesn't say that they have not entered it or anything like that. It's just that the creditor has not gone into the bank and cashed the cheque. So when the creditor does go into the bank and cash the cheque, the bank account figure, the AIB bank account figure, will reduce by 3,150. So minus 3,150. Now, when we tot all of these up, we should have the same figure. And we do, okay? So we know that we have done the bank adjustment right because our two figures will equal. And so the bank figure there, €21,730. So that is the bank adjustment done. We just need to fire the figures in. So up in the current assets, we have the 17,000 plus 3,000 plus 2,000 minus 270, and that is 21,730. Okay, in the current assets, in the invested income due, we minus 3,000 from that. Okay, so that's that entered as well. Then in the debtors, we minus 5,000. Okay, bad debts written off. Then in our salaries and general expenses, we minus the 3,000, put it into the expenses. And then creditors minus 270 in creditors minus 1 year as well. So we fire all of our figures in. And then that is the adjustment number 7 done. So it looks like a hell of a lot, but you just break it down bit by bit. You'll definitely get the bank figure right because you know you have to, the two amounts have to equal. So you'll figure out where you went wrong along the way if you have, and you'll come to the same answer when you play around with it a bit. Okay, adjustment number 8 then. Premises to be depreciated by 2% of cost per annum. So premises to be depreciated by 2% of cost per annum. Okay, so look, remember a lot has happened to premises here, okay? Like we had 850 and then we minus the 28 fire damage. Then we add the 30 and 35 that it costs to rebuild it, right? So that's 887,000, okay? Needs to be depreciated by 2%. So 887,000 multiplied by 2%, 17,740 into administration expenses. Then we add the 17,740 to the 41,000 accumulated depreciation in the trial balance, and that is minus 58,740 euro, and that is 828,260 euro then at the end of the year. So that is the premises depreciation done. The next thing says, okay, that delivery vans are to be depreciated by 30% of the net book value. So delivery vans are to be depreciated by 30% of the net book value. So net book value means that we are doing it based on, right, how much depreciation has been charged so far. Like what are the delivery vans actually worth at this time, right? So the net book value would be the cost, which was 120, minus the 24,200 accumulated depreciation that we took from the trial balance. So 120 minus 24,200, right? And then we multiply that by 30%, and that gives us 28,740 euro, which we would then add to the accumulated depreciation up in the balance sheet. So overall, you're going to have 120,000 in the cost for the delivery vans. You're going to have 52,940 in the accumulated depreciation, and you're going to have 67,060 in the net book value. So that's the adjustment number 2 done. Last then, we're going to have debenture interest due and investment income due. And we already have a lot of this done. Okay, so our investment income due, we had 9,000 for the year. We received 3,000 because they were in the patents incorrectly. And then the other 3,000 we got paid directly into the bank in the bank adjustment. So we've got 3,000 investment income due at the end of the year. And the debenture interest due, our debenture interest for the year was 28 grand, but we actually didn't pay any debenture interest so far this year. So at the end of the year, we owe 28,000. Now that's a bit unrealistic because, you'd have to be paying some interest. But anyway, that's not our concern right now. But anyway, that is what your accounts look like. Okay, what you have to do now is you just have to tot up all of the totals. So totting up the sales, 892,900, totting up the purchases, 413, totting up the closing stock, 76,200. So we tot all of this up here. We get a cost of sales, 384,800, which we take away from our sales. That gives us 508,100. We add up all the selling and distribution, 36,740. We add up director's fees, we get 65,500. We add up the salaries and general expenses, 181,000. We tot all of these up, 274,115. We add these two together, we get 310,855, which we take away from our gross profit, and that'll give me 197,245. I add my 800, and that'll give me an operating profit of 198,045. I add my investment income, I take away my debenture interest, I've got no corporation tax here. They didn't give me an adjustment to do, but there would be corporation tax. I take away my dividends paid. I had no transfer to capital reserve, I wasn't asked to do that. That is a retained profit of 132,045, and I take away my 52,000 loss that I made from last year, and that gives me a profit and loss balance of 80,045 euro, which I will be bringing over to my balance sheet. Okay, 80,045. So in my balance sheet then, I have to it's very important that I tot these up, because I could be getting a penalty of -2 or 3 if I do not tot up my tangible fixed assets. I add my 55,125 patents to my 895,320 tangible fixed assets, and then my 200,000 investments, and that's going to give me 1150,445. My current assets then, I've got my 25 grand advertising prepaid, 51,200 debtors. I'm going to take away my bad debts provision of 3,800. I've got bank figure 21,730, investment income due 3,000, my closing stock 76,200, and my insurance claim. I tot all of them up, I get 211,330. Now my creditors, I only have 2 creditors, which is very strange, but I have creditors 53,730 and debenture interest due 28,000. That's added up to 81,730. That gives me a working capital of 129,600, and I add that to my total fixed assets and I get €1,280,045. Then I tot up I've got my 400,000 debentures. I add my 800,000 to my 80,045. That's 880 and 45. And then I add my 400,000 and my 880,045. That gives me 1280045. So that is it totted up. You should not spend more than 5 minutes doing this. It's very important that you know in a question, like people can get consumed with trying to get their accounts to balance, but what you need to realize is you could be spending your time way more wisely on a different question in your exam, getting you way more marks. So it really is very important to kind of just say to yourself, is my time being spent wisely here, or can I earn marks somewhere else? Okay.